Hello, my name is Troy Epperson, and this is my website, oneononetrading.com. I've been doing trading and educating for many, many years, and if you're that guy that are almost break even, you're break even, you can't quite get over the line into profitability, maybe you could use a couple of hours of coaching that will really help maybe focus you and get you on your path to success. If so, please check out my website, oneononetrading.com, and I hope you enjoy the morning brief.
Hey, good morning to the morning brief. Today is Wednesday, March 8th. We've had some numbers already come out this morning. 8:15 number was the ADP non-farm employment change, which was 242,000 versus 197. What does this mean? It means that the labor market is super strong. Continues to be strong, much to the demise of the Federal Reserve. That means that the Fed will have to raise rates in order to get the economy to slow down, particularly the labor part of the economy. We also have trade balance that was at 830, which is negative. It was a little bit less than expected, but not significantly. For you macro economists out there, you know that negative trade balances over a very long period of time eventually come to bear on the market. And, I always wonder when the piper will have to be paid for the negative trade balance, but it hasn't been anytime soon, and it may not be anytime in the near future either. But it's always something I keep in the back of my mind. Eventually, we have to pay for this in some form or fashion. That being said, it's not a high priority, and it takes a very long time for these things to work out in the macroeconomics field. At 10 a.m., we have two major things going on here. We have Federal Chair Powell testifying again, talking again, so we should get some more hawkish, stuff about them needing to raise rates and how rates are going to be high for an extended period, et cetera, et cetera. We also have Bank of Canada rate statement, and we have the JOLTS job openings number. All of those are going to be at 10 a.m. I am going to not be trading. I'll be flat watching on the sidelines. 10:30, we have crude oil inventories, and we have a bond auction this afternoon at 1 o'clock. Beige Book at 2 p.m. Beige Book, while it is a low-impact item, I actually do look at the Beige Book because there is a lot of details in the Beige Book that gives us more insight into what is going on in the economy. That being said, let's jump over to charts. You can see we had the 1, 2, 3 days up, fourth day down day. That 3 pattern you will see over and over again. You always want to be aware of 3s, 5s, 7s, and 9s. In fact, I'm going to switch gears here and take a look at crude oil here. 1, 2, 3, 4, 5 greens in a row. So there's an example of 5 days in a row. 5 days in a row. So it's not just the ES that manifests itself. Those patterns are prevalent on other instruments as well. So where can we go today? I think we could easily test this low from earlier last week around the 39.25 because of the size of the bar. So if you just make that, look at the size of the bar and say, oh, where could it go? It could easily retest that low. Like I said, 39.25. On the top side, we could yesterday's high or the day before's high at 4,082. That's probably all you're going to get on the top side. I've kept the trend lines in because even though this one has been violated, because it is a wedge type pattern. Remember that wedges eventually will get broken out of. So we've got some consolidation going on here, and we'll have a breakout in one direction or another, virtually guaranteed. Taking a look at the inventory. Inventory is another divergence, down price action. And what do we have? We have an up. We have a positive 3,100. 3154 to be precise, 3154 positive inventory with negative price action. That is divergence. What does this mean? This is a classic example of buying the dip. So this is people buying the dip. Now, whether they're going to be successful or not is dependent. Remember, usually the people who buy the dip are the weak hands. So if we continue to go down, these guys will bail out. They will not hang around for very long. That being said, that's exactly the type of thing we're looking for here is divergence and try to figure out why. Well, at least in my experience, when you see a big down day and a high inventory, it's buyers coming in at the end of the day trying to buy the bottom or expecting to buy the dip. So buy the dips coming in here. That's what the behavior is. Now, looking at the intraday chart, looking for intraday support and resistance. The intraday are for resistance on the top side. You see here, there really isn't a lot of confluence till you get up into the 40.58, 40.64, maybe a little bit at 40.78. Those are way up there, and even maybe more at 40.89. So we have 4 levels up high. They're a long way away. There's a little bit of confluence around 40.38. That is about it. So we have some room to move before resistance. On the downside, lots of support. Kind of the opposite scenario. You can see right here at the overnight low, there is a bunch of lines right there. So around 39.82, you can drop down. You even have a little band right here around 39.75, 39.55, 39.43, and 39.24. So there's a bunch of support that's relatively close to current price. Then it is what it is. So we always want to be playing both sides. So we want to have areas of support mapped out and areas of resistance mapped out every single day so we can know where price could go. Stock Traders Almanac today is negative 42.9% chance the market will go up, which means there is basically a 7.1% chance, I should say a negative 7.1% chance that the market will go down. So if we split that out, that's about a 57% chance the market will go down, not up today. That is from the Stock Traders Almanac. It's a historical number. It helps us determine a bias. We have a slight negative bias today. Hope you guys have a great day. Happy trading. See you tomorrow.